Great, wonderful. Thanks, Tim. Well, excited to present our company, tell everybody about what we're working on in the oil and gas industry in Australia. Give a little bit of background on Black Mountain and how we ultimately went international in our search of interesting oil and gas deposits. So, Tim, if you want to flip to the next slide, kind of jump past all the disclaimers here. So a bit of the highlights. And quickly, a bit of background on Black Mountain. So I started the company in 2007. Over the last 15 years, we've built and sold 9 different companies. We're very familiar with early stage startups, done really well over the years with that and building assets and taking them up the food chain and ultimately monetizing them. So this is very much in our wheelhouse. All of our companies that we built have been within oil and gas. Probably most notably, we sold our New Mexico assets to Marathon for $700 million US about 3 or 4 years ago. So we know the playbook on advancing these projects. So bringing it to our Valhalla project specifically, we were entirely captivated with the thematic that long-term natural gas demand in Asia is going to be robust, and ultimately having deposits in close proximity to Asia's doorstep makes you very advantaged from an LNG perspective. So as we looked abroad beyond the US at interesting basins and assets to go pursue, we felt like Valhalla had a lot of differentiating aspects. Attractive cost of development. It already had gas to surface out of all the wells that Mitsubishi had drilled. So we're very much not explorationists at heart. Like, we like more execution. And so having a quantifiable deposit was really important to us. We've got tremendous support from the local stakeholders and TOs. And yeah, we feel like it's very strategically advantaged to Asian markets. And we've got the right skill set to commercialize it. Our team's drilled over 3,000 horizontal wells in the US. So very accustomed to executing at a high level. And recently, our project got a DOM gas exemption from the WA government. So we do have the ability to take gas throughout an LNG, whether it be Northwest Shelf, Darwin, et cetera. So we can hit the export markets. So Tim, if we kind of jump to the next one. So here's an overview of our asset, and we looked at all the basins when we were evaluating what has the best unconventional potential within Australia, and staying cognizant that we wanted to be onshore. Offshore, I think there's a lot of issues with legacy liabilities that we probably weren't too keen to take on. So looked at the Beetaloo, the Perth, the Cooper, et cetera, but the Canning felt like it had the right size and scope for us. So altogether about 1 million acres. So really felt like it could be quite impactful. 1.5 T's contingent, close to 12 T's of prospective resource. So really kind of platform type asset that frankly, we think will be $1 billion plus company someday. So we really liked it. In 2015, Mitsubishi had drilled 3 vertical wells, fracked 11 zones. All 11 zones flow gas to surface. So we found that just incredibly exciting. And keeping in mind that Mitsubishi was not a traditional onshore oil and gas operator. So that would be one comment, and then two, just the advancement within the oil and gas industry on the drilling and completion side has been dramatic. And so even 2015 is, Gen 1, Gen 2 type completion style. So we get extremely excited about what the asset will be able to produce. And on the map, real quick, before we jump to the next slide, so in red is the Canning Basin, so in the northern part of Western Australia. And within the Canning, you'll see the purple polygon, and that is our Valhalla project. Okay, Tim, we'll jump to the next one. So obviously, social responsibility is extremely important. You have to have traditional owner buy-in, which we very much have that. Lots of letters of support, lots of potential jobs for the community. So they've been extremely enthusiastic about having economic development. So excited to have that in good shape. And Tim will jump to the next one. One interesting aspect, and whether you believe ultimately carbon has a tax or just an expense by virtue of offsets, your carbon footprint, does and will matter. And so one thing that we find very interesting and advantageous about our asset, you'll see on the graph there, it's about 2% CO2, which is, extremely low by any kind of relative measure. And when you look at Barossa or Gorgon and Browse, you're talking, order of magnitude higher. So in general, we think it's going to be low on the cost curve when you have to start incorporating your carbon footprint. So Tim, we'll go to the next one. Obviously, environmental is huge to us, and making sure that we, operate in a culturally and environmentally friendly manner. So a lot of thought going into baseline studies, overall relative footprint of our activity. And one of the great things about the advent of horizontal drilling versus vertical is you've gotten to the point where you'll drill one well per square mile. So you're talking about a couple acres out of, 640 acres. So extremely light footprint. So we really like that for the local environment. Then we'll jump to the next one. And I covered a bit of our background. Again, as founder and CEO, we've spent our whole careers within oil and gas. Been really successful in the US with a similar playbook, and really we're quite intrepid and entrepreneurial. And our thesis started with, it's very presumptuous for us to assume the US has the only good unconventional rocks in the world. So starting with that's not true. Next is, well, what jurisdictions are interesting and in closer proximity to high demand markets. So Australia was a natural fit. We had already had a company based out of Perth, but Black Mountain Metals, that had nickel assets, so very familiar with the operating environment. And so super excited about bringing our oil and gas expertise to Australia. And then we'll jump to the next one. Fit on our team. We won't try and walk through everybody, but a great mix of local Perth-based talent plus US domestic E&P expertise that have really kind of spent their whole careers within the space. So got a great group of men and women kind of helping us execute the vision. Then we'll jump to the next one. And this is just a little more zoomed in view of the asset. The Valhalla asset being EP371 in yellow, and you see some of the existing drill holes on the asset, which gives us a lot of geologic data and comfort that within the Fitzroy Trough, you've really got an interesting stacked pay kind of situation with numerous zones of gas bearing rocks. So that's the more kind of close in view. Then we'll jump to the next one. And pathways to commerciality, super important. That's really all the basin is missing, is access to both domestic and international markets. So we're putting a lot of thought into pipeline studies, pipeline negotiations, and ultimately, I think in all likelihood, the pathway being to the west and going over to Karratha and Port Hedland, and both linking up to the Western gas system and ultimately having accessibility to LNGs in that proximity. So a lot of thought going into this, but a lot of really interesting optionality given the size of the asset. And the next one. And this is a little more of a granular take at probably what is the most preferred route, going west and accessing kind of Western gas markets and potentially Asian markets through Northwest Shelf tolling. So good conversations across the board on kind of the Western route and receptivity. So certainly that infrastructure is a bit short gas this decade, and so a lot of common receptivity to really kind of bring our asset into the system. So we'll go to the next one. yeah, I think we kind of covered all the points. We think it's, we feel like we brought it to market at an extremely good value. Pre-money Aussie 40 million, post-money 51 million market cap. So given the the 200 million plus that Mitsubishi had spent on it prior, we're quite excited that the project's well advanced versus where it sits currently at a market cap pricing. So super excited to give the pitch here and let guys kind of hear about what we're up to, and hopefully have you guys along for the ride. So
thanks, Rhett.
Yeah.
Thank you, Rhett. We've got a few questions here.
Sure.
There might be a little bit of static in the background. Now, next door, you've got the Beetaloo Basin, which has kind of seen significant government funding. Where is the Canning Basin position in regards to this conversation? I suppose you're looking for government funding in terms of the pipeline, are you?
So not necessarily government funding, and aware that the Beetaloo was able to get some government, support, which I think, we haven't spent a lot of time in pursuit of kind of, government grants or whatnot. Quite confident kind of in the private market ability to execute and finance. So not something we've heavily pursued on the government kind of funding side, if you will.
And where does natural gas sit in that funding conversation when you go and approach external funders? Given we know
Sure.
what's going on in oil and coal, for example, where does natural
Sure.
gas sit?
I would say there's been kind of a reawakening as to the importance of it as a potential bridge fuel for the next 40, 50 years. Obviously, renewables are great. We've got investments on the renewable side. So, we've got a foot kind of in both arenas. But what I would say is renewables are fundamentally a much different source of power. So you're really taking dispatchable, firm, deliverable power and replacing it with intermittent resources, which creates issues for the grid. So natural gas is kind of a baseline dispatchable source of power is really an attractive pairing with renewables given those dynamics. So going to be around for a long time to come. So
and there's a question on that. Any financial success stories to report using this carbon neutral smarter gas extraction?
Yeah, it's really becoming big in the States. So EQT, Toby Rice, a lot of guys are really pushing their companies towards more, responsibly sourced gas. So it is, I would say within 5 years, most of the industry is doing everything they can to offset scope 1, scope 2, and really kind of trying to be quite carbon neutral. So, the world will have a balance between, kind of the energy accessibility and dependability and, doing it responsibly. So we feel like that balance will need to be there. And certainly we intend to be one of those balance participants.
And just finally, can you comment on timing of drilling for 2022? How are your approvals tracking, and when do you
Sure.
expect to start drilling?
Yeah, so this year, in the States, our summer will be all about our seismic program. So we'll be kind of refining the landing zones, if you will, of the next batch of drilling, which will be late 23, early 24. So up until then, we got a lot of work to do, commercializing, negotiations, and kind of getting ready for drilling. So
excellent, thank you.
Yeah,
Rhett, we've got a couple more questions there, if you wouldn't mind answering them.
Sure.
Online. I think you've got some astute shareholders here. So
wonderful.
Thanks for your time.
Yeah, absolutely. Well, thanks for having me.
Thanks, Rhett.